Step into the metalverse, a vast, ever-evolving realm where industrial metals take shape amidst shifting prices, market trends, and supply chain forces. But what does it all mean for you? Welcome to Cup of Joe. Named in honor of our founder, Joseph T. Ryerson, we help you navigate the metalverse, one conversation at a time.
Hey everyone, so glad you're with us. We have a bonus episode for you this month of Cup of Joe, and it is a take on the episode we had on May 1st. So for those who had a chance to watch the May 1st episode, you'll know that Nick was not live, and he and I recorded his segment a few days prior, and then the day of the live show, we brought in Jim Reed, Director of Supply Chain for the West region in Ryerson, and Brian Crane, Product Manager for Carbon Flat Roll and Plate, to do some analysis. Now, what we did is on the live show, after Nick gave his metal updates, we brought in that appropriate product manager to add a little bit of context and color from the mill side and demand, and had a good lively discussion. So we thought, let's package that up and bring that to you as a special episode. So what you're about to hear is Jim Reed, who's going to give us some analysis on aluminum and stainless right after Nick gives his, and then Brian's going to give the steel update. So you'll have the both sides of the coin there, commodities and the actual mill demand side. So sit back and I hope you enjoy it. Here we go.
So you can see, this is a one-year chart of LME nickel prices. We did back in the early April, you can see where that Lutnick-Navarro panic really kicked in. We got down to price levels that were in the mid to low $6 per pound range, which I personally didn't think we were going to see. When you look down on the bottom section of this is the relative strength index, which is kind of saying, are we in an overbought or oversold situation? We got into pretty oversold, scary situations in nickel, in aluminum, in copper, in stocks. There was a pretty big panic sell for the first week of April. What you can see is very quickly things recovered as well, and we're now back around $7 a pound. And it looks like this $7 area is kind of a happy home for nickel prices right now. We're not trading above the moving averages yet, but it looks like we're beginning to stabilize around the $7 area. And the reason why I think we are is again because we are testing the cost curve of nickel miners. And so again, as a friendly reminder for those who haven't seen this chart before, this along the x-axis is all of the different producers and miners of nickel around the world. And over here on the right axis, this is essentially their break-even price. And so when you get down into prices that are $6.50, $7, you're basically saying that half of the industry is unprofitable. And it is worth noting that in the last week, Indonesia, which is the largest miner supplier of nickel in the world, they have implemented higher royalties on the mining of their both nickel and tin. And that's really in an effort to kind of make sure that they're getting paid, make sure they're getting rewarded for allowing people to, take this metal out of the ground. But what it also does is that increased royalty, and that's kind of depicted here with this orange circle here and in all the bar charts, the orange. With an increased royalty, what that's going to do, all things being equal, is it's going to increase the break-even price that a nickel miner needs in order to be profitable. So I do think that those royalties should be helpful to slow production a little. They should be helpful to raise the break-even price a little. And for that reason, I think the $7 per pound range is going to look to be a pretty comfortable area for around the lows. I'm not saying we've hit the lows absolutely, but I think we're going to see some price support in and around that area.
Interesting.
And last but not least, on the stainless and nickel side, in the last week, North American Stainless sent out this letter indicating that in the next 3 months they are going to implement their own tariffs, and it's going to be embedded into the surcharges of stainless. We don't have all the details yet, but we do have the May increase detailed down here for non-nickel bearing and nickel bearing alloys. They're not massive. I don't think they're game changers or anything, but it is certainly symbolic of the idea that their own cost increases are forcing them to pass that through to customers. So again, we hope that it doesn't break down the stainless markets here in the United States. I don't think they're large enough to do that, but it is interesting. It looks like we're going to see 2 more rounds of this in the June surcharge and the July surcharge as well.
To reiterate, does each mill kind of set their own surcharges? And I know NAS is the biggest, but would that make another producer more cost efficient?
Yeah, and so I'll give you my thought, and I would encourage you to ask Jim Reed the same thing when you have him live. But
Noted.
yeah, I mean there are really only 2 to 3 main players within North American stainless markets.
Yeah.
So probably raises the odds of, if one's doing it, the other one's going to see that as an opportunity to say, well, I have grounds to also pass through my increased costs. Um, yeah, that's my gut feeling, but I don't
Sure.
have any real good insider intel there.
Yeah, that's interesting. Okay.
Okay, Jim, we'll pick it up there. And so if I'm understanding correctly, what Nick is saying here is that North American Stainless is passing the tariff onto the end consumer through
Correct.
an increase in a surcharge. Can you explain that?
Sure. So the tariffs that are going to come in on the raw material surcharge elements are going to be passed through, as we've seen when we were going through. Remember the allocation we had back through a while back when we had
Mm-hmm.
energy surcharges and we had some silicon surcharges and other surcharges. Same way, same concept. As far as the other mills following, there's rumblings out in the market, but I've not seen anything official yet from anybody. We have had one mill that did put a price increase effective today into the market. So we're seeing how that hits the market. But for the surcharges, we're hearing rumblings, Mike, but nothing official other than what NAS has done. But yes, all the other mills do produce their own raw material monthly surcharge charts. So everybody has their own little formulas that they use as they come out monthly.
So it essentially could be one would say, hey, I'm not going to add that to it, and it might be a little bit cheaper, but in the long run, it's probably not going to be so much, right? Where
Correct.
they'll probably just go across the board, right?
100%. We're not, and like Nick said, we're not. It's not going to be anything major in the surcharges. It's going to be rather minor when we see them. But I wouldn't be surprised if the others do follow. For sure, I agree with that.
Great. And as we've been saying in the episodes prior, right? I mean, there's a lot of tariff, of course, a lot of tariff talk, and carbon and aluminum are definitely affected, but stainless seems to take less of a hit with this. Is that
Yeah.
still true today?
Yeah, absolutely. And it's kind of a twofold. So on the flat side of the business, there was already a 25% tariff coming in for most of the other countries coming into the US. So not a lot of change on that side. There were some countries that had quotas, right? That they couldn't go over the quota. So now that the quotas are gone, now they also have a 25% tariff. So haven't seen a lot of movement or change with because of the tariff that was been re-announced for the 25% on the stainless side of the business. I think Brian will talk about it also on the carbon. There was already some carbon tariffs coming into this
Mhm.
country. One area where it's really affecting it truly is in the stainless, let's say bar or lawn products, because there was a lot of people using the quotas, bringing in material. Now what we're finding is some of the domestic stainless bar producers are picking up more activity, more tons going through because they're not able to get those tons from, let's say, other countries without having the tariff coming through. So we're starting to see a little bit of activity on the bar side or the long side of the business in the domestic mills for sure.
Gotcha. Okay. And I guess overall, like, what's the pulse of the mills right now in the stainless world? What's kind of what's going on that front?
Sure. Well, right now the mills are still just over 80% of capacity, utilization. So they're not quite, all the way where they want to be. The April and May bookings have been relatively soft, nothing booming, nothing great. Business conditions are okay, right? As Nick talked about, the nickel $7, about the $7 range. So we're not really anticipating a big surcharge change even for the month of June as of
Mhm.
right now. So things are kind of soft right now, to be honest with you. Activity isn't what we'd like it to be. I think a lot of people are still kind of in limbo, if you will, of what's really going to happen with the tariffs, and they're kind of holding off right now. They don't want to go too far out.
Yeah, that makes sense. Any particular
Yeah.
markets do you think are holding back a little bit, or when you're hearing customers, or on the opposite side, do you see maybe boom, or are things just kind of standing pat?
On the stainless side, pretty standing pat. We are starting to see more and more people request domestic only, right?
Hmm.
And I'm sure Brian will come across that too in his carbon discussion. But more and more people are requesting, please quote, domestic U.S. only for various reasons. So not it's been relatively quiet on the stainless side, as Nick kind of mentioned.
Okay. All right. Well, we started with the soft one, so let's head over to aluminum. Let's continue down the path here, and I think Jim, you can answer some of those questions for us as well.
Switching over to aluminum, very similar story, and maybe even larger to the downside in terms of the move that we saw on LME aluminum ingot over the last month. You can see just 30 days ago, we were trading at $1.25. And very, very quickly, as markets started to sell off, stocks were tanking. Aluminum was no exception. And you look down at this relative strength index, typically anything below 30 is suggestive of oversold conditions. The aluminum market got all the way down to like 13 or 14, which is like a 3 or 4 standard deviation move to the downside, which means it doesn't happen very often. And the good news for producers is that it didn't last very long. The bad news for consumers is it didn't last very long. We have rebounded a bit. There has been kind of a dead cat bounce, similar to nickel, where we've seen prices go from about $1.05 back up to $1.12. My personal opinion, I think probably $1.10 to $1.15 looks like a fairly healthy and natural range for aluminum for the coming months. Again, not investment advice, but I think it's going to be fairly range bound. I don't think we need to be all the way up at $1.25. I don't think $1.05 made a ton of sense either, but somewhere in the $1.10, $1.15 range seems like a healthy area where both producers and consumers are relatively happy. Now on the Midwest premium side, not a massive move, but a couple cents. We have seen the Midwest premium futures move slightly higher. The blue line would be as of a month ago. The white line is as of today. What I think is happening there is, and I believe we noted this last month in the Cup of Joe, as I understand it, back in November, December, January, there were a lot of pre-tariff aluminum ingot units that came into the United States. They basically came in around, let's say, 20 cents a pound. Then the tariffs went into effect and everybody was thinking the spot price was going to go to 45 cents, 50 cents, 60 cents, and it never got there. And from what we understand, those pre-tariff units of ingot were kind of getting discounted out in the market. So they were saying, well, if I can make 15 cents and sell this ingot that I brought in for 20 cents, at a 20 cent premium, sell it for 30 or 35 cent premium, I'm going to do so. That's a great trade. And so we understand that was taking place quite a bit over the last couple of months, probably still taking place a bit, but there is going to be a point in time as we roll through the next few months where those discounted pre-tariff ingot units aren't going to be out in the market anymore. So then we could actually start to see premiums move into the 40-cent range. So we're not going straight there, but it does look as though we are creeping ever so slightly higher on Midwest premium futures.
I remember around that time, I messaged you on occasion throughout those 2 weeks going, why is it going lower? Do I not understand this right? Or you're probably saying, shut up.
Yeah, because just the straight up math would say you should have been somewhere around 45 cents to 50 cents. That's what all the prognosticators around aluminum were saying too. And then we started to see pressure on the spot number, and we're like, what's going on? And that was kind of when people were like, well, somebody brought a whole lot in right before the tariffs went into effect. But at some point, we're going to work through those stockpiles.
Yeah.
Okay, I'll pause there, and I'll say that it's difficult to listen to yourself on recording here. So, but I think what we were getting at there is right. So right away you saw, I mean, it was anticipated Midwest premium would spike up. It went lower a little bit, but there was kind of a unique opportunity there, or a unique occurrence, I guess, in the marketplace. Jim, I think in a lot of ways, this is just my opinion. The biggest concern when all these tariff news hit, right, was from aluminum, right? Aluminum, we source so much of it from Canada. Automotive is dependent on it, and so somewhat. And where are we at now? Like, what are you hearing from customers? Are they looking at supply chains? Like, what's the pulse of the aluminum market? I'd ask you from both the mill side and then from what we're hearing from customers.
Sure. Like for example, today the metal number came down versus what it was in April, right? pretty drastically. And that's a combination of what Nick mentioned, where it was 30 days ago to where it is today. So, and I do agree with Nick, the Midwest premium is probably going to stick somewhere between 10 and 15 cent range, right? As far as the Midwest premium, right around the 38, 40 cent range right there. Today was at 38 cent. Back in March, it was like at 42 cent. And the LME has had some fluctuation. I think Nick's right. $1.10, $1.15 is probably where I think it's probably going to end up. Right today, looking at it, was like $1.08. So we're seeing that. Okay. There's a lot of people not going real long, but taking long positions on some things, and they're just buying for what they need, and they're holding off on putting too much inventory in, waiting to see really what happens. The U.S. depots at some of the domestic mills are drying up. There's not as much in depot as there was. So production is still out there, but the customers are kind of laying back. Now, most of the mills, if not all of them, put a price increase through pretty quick back in February, anywhere from 15 cents to 20 cents a pound, right? So those are in effect currently, right? I think some of them are maybe rethinking that to see if that makes sense. We did, similar to the stainless, we did see one mill, Constellium, put a surcharge, tariff surcharge, if you will, on certain pieces of business, just like North American did for their raw material surcharge. So we're thinking, again, there's rumblings that some of the other mills are looking at that, maybe putting a surcharge in for the tariff. So in general, people are making big buys. They're just buying what they need. For us at Ryerson, we're still making our production buys, but we're not going too far out either. We're staying comfortable, and we don't want to have high price material if the Midwest premium continues to drop or if the LME changes, for sure.
Yeah. Okay. So it seems like a lot of upfront buying, holding off to see ultimately what happens. Could that then in the second half of the year kind of throw off the demand projections or what's
so absolutely it could. We're negotiating now with our second half, for the mills for the second half and getting bids. We're seeing a lot of customers ask for second half bids. We're actually getting some customers saying, so what do you think for 2026? Some of the mills aren't all excited yet to be quoting 2026 business, but we're doing a lot of the second half bidding where the numbers are being. I haven't booked any for second half, to be honest with you. But I think there's a lot of fishing to see what's going to happen in the market, where the price is going to be for the second half. Business again is okay. It's not booming. Would always like to sell more, but we have noticed that the depots, again, the master distributors and at the mill level, have reduced. A lot of people have picked up some depot stock. Okay.
So it sounds like not a lot have scrambled to reshuffle supply chains, right? This and that, and some have kind of created in some creative ways, but I think for the most part, it sounds like they're just kind of laying back.
Yeah, I think in the beginning when all this happened, there was a lot of quick, let's reshuffle some supply chains. Again, we are seeing a lot of quoting activity. Like, we'd like to have domestic, because the tariff went from the 10% to the 25%. So it was a 15% addition to the tariff on Section 232 on the aluminum. So we're watching that. So a lot of people did kind of make some shifts or look at some other ways to change their supply chain if it made sense.
Makes sense. Okay. Anything else, Jim, on the aluminum front that as of note as listeners today are planning or looking at the market right now?
No, I would say here at Ryerson, we're stocked pretty well. I think our inventory in general is in a very good position. We're not going too far out. We're staying rather short. We're that way we can go up and down with the market. Just communication to their sales reps if they have anything. Just continuous conversation.
Okay, great. Thanks, Jim. We'll hang out for a little bit. After all said and done, we'll get some questions coming in. But let's get into the steel side and hear what Brian has to say. So first, let's hear what Nick discussed.
On the carbon side of things, it does feel as though we're getting a little peaky. I probably said the same thing last month, and you can see we've sort of been plateauing. I would say the market's held up at these prices a little better than I would have expected. Nucor CSP is still trading at 930. Fast markets is still trading in the 925, 930 range. So spot indexes are holding up, and I think Cliff's numbers all the way up at 975, although that one probably carries a little less weight in the market. But the CRU just came in last week at 945. We'll have to see what Wednesday's number is, and I won't have that information obviously because this is recorded. But there is an expectation we're going to see a little bit of softness in the coming months, and I'd say for a couple of reasons. One is demand is just kind of okay. It's not horrible. It's kind of flattish year over year on numbers that are already like not that wonderful. So the demand probably doesn't support a mid 900s type number. Tariffs do help. Tariffs certainly raise the floor under which imported product can ultimately come in. But I think just given the fact that we aren't seeing demand going gangbusters in the first quarter and beginning of the second quarter, prices are probably going to peak out here in the coming weeks. Now, how much do we sell off from here? That depends on who you ask, but the futures market is kind of saying somewhere around the range of about $75 to $100 in the next 3 or 4 months. The good news for anybody who watches the hedging markets is it's already built into the price. So if anybody wants any fixed pricing for the balance of the year, we can already access this cheaper pricing and offer any one of our customers that cheaper number using the futures contracts. So keep that in mind if you're like, I don't really want to wait around. I'd love to get an insurance contract and lock those numbers in because we can make some money at those types of prices. We can do that for you. The other thing that I think's weighing a little bit on carbon prices is scrap. Scrap flows have slowed down a little bit to foreign sources. I'd probably say namely to Turkey. The better weather here in the United States is actually allowing more supply to come available. The expectation is that in the month of May, we'll see scrap prices again lower by another $30. So what does that mean? That's just lowering the cost under which an EAF, an electric arc furnace producer can make profits at lower numbers. So I think we will see a little bit of pressure on carbon sheet prices as we roll through the next couple months, barring additional tariffs and things like that. But I don't expect further steel and aluminum tariffs at this point in time.
Put a pin in that for a second to fill in the gaps. Like I said, we recorded on Tuesday. The CRU number came in at 923. Nucor 930 once again. And Brian, I don't know. I think Cliff's. Well, I think he said 975. If that's still accurate.
Yeah, I believe so.
And so for Nucor, they were on then their CSP. They were rising for a while, and I think that's probably 4 weeks in a row they've maintained at 930. Is that correct?
Yeah, that's right. This is the 4th straight week that they've maintained. Yeah, and I think Nick really said it well. I think we're just seeing a lot of stability, if not a pricing crossroads, if you will. Mm-hmm. We've seen. I think we've definitely seen the peak. And we're going to start to see some of that backwardization happen now.
There's a question that came in earlier from the audience about alloy surcharges. Are they likely to be felt in the SBQ market as well?
Yeah, I believe that the SBQ surcharges did increase slightly month over month, and yeah, we can dig into that and get some real answers for that question here. But yeah, we did see a slight increase in SBQ surcharges.
Okay. So current situation in steel, you got the tariff situation, obviously, and then there's this slowdown in scrap. And scrap being the key ingredient to producing steel. What is, I guess, talk me through that. How are mills responding to that? I mean, is that going to place a lot of downward pressure on pricing, or unpack that a little bit for us, could you?
Yeah, I think it's going to get there. I think you can say the scrap market as a whole is under some pressure because of some of the things that Nick just kind of nailed on the head. It's the warmer months, so we don't have to worry about where scrap is coming from. The transportation lanes are freer now. Inventories are higher. Scrap dealers and steel makers have seen a little bit of a demand slip, and with the uncertainty in the market, we have seen inventories kind of remain steady and flush. So there is an ample supply of scrap, which is a downward forcing act on those scrap prices. So, and furthermore, our scrap exports have not been robust lately, and The Turkish buyers are some of the largest scrap buyers in the world, and they have been on the sidelines lately.
Okay. So, I'm going to ask you the same question I asked Jim on the stainless and aluminum side. Have you seen a lot of, reconfiguring of supply chains, or is it more of a wait and see approach? I guess what are the customers saying right now?
It's a little bit of both. I mean, we have definitely been working with quite a few customers to look at options. Here's our current supply chain. What if we switch to X? What if we did Y? So yeah, we've been going through that process with several people. Other people have taken the approach of, let's just see how this works out.
Yeah.
So it's a good, healthy mix of both.
Yeah, and shameless plug for the webinar we're having on May 15th, where we'll be talking a lot about, your source of material from foreign sources. All of a sudden, the supply chain needs to go domestic. What do you do? How do you reconfigure the supply chain? So those are the types of things that our advanced processing team and supply chain will be addressing. So, okay, lead times, are they holding steady? Are they still pushing out more? What are you seeing from lead times, Brian?
I would say that they're holding steady. They are manageable, and the mills are coming off a bit of planned and even unplanned set of outages. So there have been some production issues which have led the mills to be a little bit order entry controlled, but not allocation. So it's kept the utilization rates in the mid 70s. So I think we've seen mill utilization rates in 74 to 76, and so lead times are manageable, not too bad, not too. We don't see any accidents coming up to say that lead times are going to increase anytime soon.
Okay. Similarly, as Jim described about folks holding back and or maybe front loading some of the buy and kind of the demand. Are you seeing something similar, and do you think that there's some demand that can kind of hold that floor for a while?
Yeah, we definitely saw a flurry of activity in Q1. A lot of pre-buys, a lot of people trying to make sure that that if they had the capital and the space, they bulked up on some inventory. Hot markets right now, data center activity remains very, very robust. A lot of activity in that market. We've seen some energy markets really kind of rebound lately, and some new life in the shipbuilding industry as of late as well. So there are some definite bright spots, but I think mixed is the word of the day.
Well, they want to bring all shipbuilding back to United States, right? From what I hear.
Yes, they would like to definitely see a lot of shipbuilding come back to the States.
Yeah. Okay. Lastly, plate. Nick didn't touch on it, but how's that market looking right now? Still a pretty big gap between that and hot roll, or not?
Yeah, I think we're still seeing a fairly wide gap between those two markets. That market, plate holding up a little better. I think that has a natural, it's a little more natural in the holdup of prices. You have less producers. Mm-hmm. So you've got a different set of producers holding a little bit of some discipline, but they are busy. So you've got a lot of line pipe jobs that happened earlier in the year, so that's taken up a lot of tons at the plate producers in the Midwest. So they're busy. They've got a strong order book, and right now it looks good for them.
Okay. Anything else on the carbon front that our listeners should be aware of, or just words of advice going forward? Brian Crane.
I would say is stay close to your customers, stay close, ask questions. Our crystal ball is a little murky, but we'll give you some of the best answers that we can come up with at the time that the question's asked.